All right, some of you may have seen my videos in the past talking about my healthcare fund, my healthcare stock that's earning paying a dividend, is paying pretty well. But did you know this healthcare? But all right, welcome back once again. Did you know this healthcare stock I'm currently invested in has AbbVie as one of its holdings? It owns several different companies in this fund or stock, and I'm going to give you more detail about it. So pay attention. I'll be right back. Welcome back once again. Pascal and Tom bringing another show today. Today I'm talking about Tekla World Healthcare Fund. It is a fund. It says it's a fund, but it's actually a passive income stock that I've been drawing money from every month. Okay, this is one you need to pay attention to because I'm going to go into a lot of detail. And as I mentioned earlier, it owns AbbVie. It owns a couple other well-known stocks you've heard of. It's all in one little fund. You get paid monthly from it. And the best part, it pays a high dividend. A lot of people are scared of high dividends, but I'm going to give you a quick little idea of what's involved with this stock. And also, it's a global company. It has a global company. I've mentioned this previously in the past, but it's a global company. It's healthcare. Everybody needs healthcare. Healthcare is not going anywhere. Everybody needs it every day at one point or another. They will need it. Nobody is Superman. All right. Nobody here is Superman. You're going to need healthcare at one point or another in your life. All right. Before I go on any further, this is not financial advice. All, what I've been investing in, what I'm doing, and what's been known, what I've been doing for the couple months now. But I've been investing for a long time. But do your due diligence, do your homework, and everything. You know the whole deal. All right. But World Healthcare Fund. This fund has been implemented a managed distribution policy that provides monthly distributions at a rate set by the Board of Trustees. Under the current policy, the fund intends to make monthly distributions at a rate of 11 cents per share to shareholders of record. The policy would result in a capital return to shareholders in the amount of distribution exceeds the fund's net investment income and realized capital gains. A return of capital may occur, for example, when some or all of the money that you invested in the fund is paid back to you. A fund of capital distribution does not necessarily reflect the fund's investment performance and should not be confused with yield or income. I'm going to briefly read, what this came out of the last report from the company directly to its shareholders. So you're getting some inside information here, all right? Investing in healthcare companies continue to be an interesting and dynamic endeavor. As investors, our primary emphasis at Tekla has been to identify novel technologies and drugs have been developed and are commercialized by sport management teams, and then invest in the associated companies at the right time and price. Over the last 20 years, we have seen and reported to you on remarkable progress in the improvement in quality and durability of patients' lives. Throughout this time, there has been widespread agreement about the novelty impact of these new drugs, products, and related services, but there's also been legitimate concern about the associated dollar costs, particularly in the United States, to both individuals and society. The result has been the promulgation of numerous proposals to dramatically change or even replace the current healthcare insurance delivery system, at least in the United States. I know you always hear about it. I always complain about healthcare. Everybody's talking about going down to Mexico, some other place to get their drugs for cheaper. It's crazy. We're paying so much for these drugs, but somebody, like these companies here are making money from it. But it's a great time for you to make money as well. A popular Lewis theme reprised with vigor of late is to replace the current U.S. healthcare system, which is largely employer-based. The most common proposal is a centrally managed single-payer system which would presumably define benefits and premiums for recipients as well as reimbursement payments for providers, manufacturers, and distributors. Given the current national conversation about this and the potential impact of such change in the U.S., the global pharmaceutical biotech market, we have developed in view of the likely outcome and its impact on our investing approach. We conclude that there may be some near-term volatility in our sector rising from the recent proposals, particularly in next year, meaning this year, as the U.S. presidential election is resolved. However, beyond this period, we don't foresee dramatic change in how healthcare works in the United States. For Americans, they see these issues with the healthcare costs, coverage, and quality in general A significant majority of the U.S. adults, they rate both their own healthcare coverage 69%, and they care that they personally receive 80% as either good or excellent. This is from the Gallup poll. In addition, the rate at which healthcare is growing has declined in recent years. Furthermore, as we have previously noted, healthcare comprises about 20% of the U.S. economy, and a complete replacement would be tumultuous. The combination of these factors does not suggest to any fundamental change in the near term. Rather than sweeping change, we expect that there will continue to be modest changes to address the specific issues. As a result, we do not conclude the need for any major change in our investing approach. We will incorporate market sentiment and cost-related factors, but our fundamental approach to investing will continue to emphasize differentiating products and talented management. Having said this, given the breadth of the healthcare sector, there will always be a macro and micro factors that will make us more or less confident in the short-term prospects of the healthcare sector or one of its subsectors. There's more information here, but I'm going to cut down to what you really want to find out. Okay, as you see here, Tekla Wealth Healthcare Fund trading as of $14.21. This is as of Wednesday, about 2 p.m. Eastern time. Excuse me. The forward dividend is 1.4, and the forward dividend yield is 9.89%. As you can see here, the way the stock has performed over the past year, that's what the green chart shows. It was just above $12 last year around this time. It's currently at $14.21, so it's made almost $2, since then. And it's a little bit of dip back in around maybe around March or April time frame. But after that, it's been a steady incline for in this fund. The fund has been performing very well. The ex-dividend date is January 15th, so we've already missed that one if you wanted to get in for this next dividend to get paid. But the next one will be a few months from now. So, excuse me. So if you want to get involved with this, you've missed this current one to get paid for next month. But it will like I said earlier, this dividend will pay you monthly. It will pay you monthly. So something to keep in mind. Okay, so the investment philosophy for Tekla has been that they believe that aging demographics and the adoption of new medical products and services may provide long-term tailwinds for the healthcare companies. Opportunities outside the United States may be underappreciated and timely. Investment opportunity spans the globe, including biotechnology, healthcare technology, life sciences, and medical devices. The potential for value creation may exist in companies both inside and outside the United States that are commercializing novel technologies. Right here, this is a quick snapshot on the holdings within the fund itself. On the right-hand side, you see pharmaceuticals at 61%, healthcare providers and services at 19%, healthcare equipment and supplies at 16.8%, biotechnology at 15.3%, REITs at 5.5%, medical devices and diagnostics 4.7%, life sciences, tools and services at 3.2%, repurchase agreement at 1.7%, healthcare services 0.7%, and other liabilities at approximately 28%, or maybe it's negative 28%. But this information is pretty subject to change. Anything could be changed from month to month, as you know. We're going to get into the holdings within this company itself. This is one you really want to pay attention. This is what you really need to pay attention to and listen in very carefully, because you may already own some of these stocks individually, but I own it already because they're all in one little stock itself and paying very well. So this is as of September 30th, 2019. You have Johnson & Johnson with 8.6%. Merck & Company at 6.4%, Pfizer and Novartis AG at 5.9%, United Health Group Incorporated, which is healthcare providers and services, at 5.2%. Some couple pharmaceuticals, AstraZeneca PLC at 4.3%. You have Roche Holdings at 3.9%. Medtronic PLC, which is a healthcare equipment and supplies, at 3.8%. GlaxoSmithKline, 3.6%. It's a pharmaceutical company. Novo Nordisk is another pharmaceutical company at 3.1%. Bristol Myers Pharmaceutical at 2.7%. Amgen Incorporated Biotech, this is 2.7%. CVS, even CVS is in here at 2.4%. Bayer AG Pharmaceuticals at 2.3%. AbbVie, the one everybody's always talking about, 2.2%. Allergen Pharmaceutical Company at 2.2%. Abbott Laboratories at 2.1%. Thermo Fisher Scientific at 2%. Zimmer Biomet Holdings Healthcare Equipment and Supplies at 1.9%. And Celgene is a biotechnology company paying 1.7%. And you have Celgene Corporation, a biotechnology company, it pays 1.7%. And now globally, where does this company? It's not just a U.S. company, as I mentioned earlier. This company is involved with multiple companies itself. So you need to pay attention and listen in, because this is a global company. All right, you're getting some international exposure when you're investing with this company. So in the United States, you have 57.3% of the net assets. Switzerland at 11%. United Kingdom at 9.9%. Ireland at 7.3%. Denmark at 3.5%, Japan at 3%, Germany at 2.3%, France at 2.1%, Netherlands at 1.1%, China exposure here at 0.4%, Australia at 0.3%, Israel at 0.2%. There's another one for 29.6%. It says United States. Not really sure what this one covers, but it may be some nations that falls under the United States, but I'll do more research to find out more on what that is exactly, because I'm not really too sure. So now we're going to hit a couple of highlights that this company's had over the past year. It's going to hit on a couple of key things. I'm going to briefly go over it, not bore you too much, but give you a quick little idea. But Smith and Nephew, SNN, a United Kingdom headquartered medical equipment company delivering products for the repair of hip, knee, and soft tissue, with nearly half its revenues come from the United States and 1/3 comes from the United Kingdom. Then you have Celltrion Incorporated, is a South Korea-based biotech company focused on biosimilars with 3 marketed products in the EU. The stock has been weak due to pricing pressure of biosimilars become more commoditized in the EU, European Union. Truxima and Hezuma are expected to launch soon in the United States, but the overall landscape for the biosimilar adoption and pricing remains uncertain. Then you have Eisai Company Ltd. This is a large cap Japanese healthcare conglomerate that sells, among other things, such as branded drugs, medical equipment, food, livestock feed. The largest value drivers in the report period for Eisai were the pivotal trials for Aducanum and Alzheimer's, for which Eisai was partnered with Biogen. The trials were read out negatively during the report period, and THW was underweight Eisai, but the fund benefited overall. Some other things that within Tekla that performed negatively impacted the following investments. The Teva Pharmaceutical Industries is one of the largest manufacturers of generic pharmaceuticals. The U.S. generic drug industry has faced significant headwinds over the past several years due to the increased competition, fewer blockbuster drugs rolling off patent, consolidation among large buying consortiums, and uncertainty around opiate drug litigation. Overall, this has led to persistent generic price deflation and a challenging operating environment. Following a management change in late 2017, turnaround efforts have included the nationalization of unprofitable products and significant cost-cutting efforts. Overall, Teva's restructuring efforts and stabilization of generic deflation helps position the company to deleverage its balance sheets and return to growth. But opiate litigation uncertainty continues to weigh on Teva. Tekla has decreased our ownership of this stock over the past year, but fund performance was negatively affected in this reporting period. Verona Pharmaceutical PLC, VRNA, is an English small cap company with a novel first-class pulmonary agent, RPL 554. Verona Pharmaceutical PLC is an English small cap company with a novel first-in-class pulmonary agent, RPL 554, including a broad-based 2 program for COPD. Although the data has been strong, the low float for the stock and the lack of excitement in COPD has put pressure on the company's stock price over the course of the year. Tekla remains optimistic in the novel anti-inflammatory and bronchodilatatory actions RPL and expect the stock price to catch up in the company's fundamentals. Bayer AG is a large cap European diversified company with both pharmaceutical and agricultural businesses. The company has been undergoing a transformative reorganization, starting with the divestment of their chemical business unit into Kirievskiy in 2015 and continuing in the recent acquisition of agricultural giant Monsanto. Notably, Monsanto's Roundup product has been seeing significant news lately, high profile, issues going along with it. Some little, I don't really know the full detail, but, you've heard about it in the news, Monsanto, and what it's doing, hurting people, messing up crops and live stuff and so on. But this is causing, because of that, it's causing the stock to underperform over the past 6 months. Basically, Tekla is a closed-end fund. It's a closed-end fund, but it invests primarily in the healthcare sector. Subject to regular consideration, the trustees of THW have instituted a policy of making monthly distributions, like I mentioned, back to the shareholders. So if you're not involved with Tekla, I encourage you to check it out, do your research, and invest. I mean, how can you not get paid in healthcare? You're going to use it one day or another, so you might as well get paid for it. 20% of managed assets measured at the time of investment and non-creditable debt of healthcare companies, and may also invest up to 20% of managed assets in healthcare REITs. The fund may also hold up to 30% of managed assets in convertible securities and may invest a portion of its assets in restricted securities. In order to generate additional current income, Tekla often sells or writes calls against a material portion of its equity assets. The portion of equity assets overwritten can vary, but usually represents less than 20% of managed assets. At the time of this writing, overwritten portion of the assets is a material less than 20% of managed assets. Use of covered calls is intended to produce current income, but may limit upside in bullish markets. The fund may also use leverage to enhance the yield. The fund may incur leverage up to 20% of managed assets at the time of borrowing. Managed assets really means, the total assets of the fund, including any assets attributable to borrowings for investment purposes, minus the sum of the fund's accrued liabilities other than liabilities representing borrowings for investment purposes. So basically, it does get paid. It's going to use, covered calls and puts to make some money. That's how it generates income to make its dividends out to its shareholders, excuse me. The fund considers investments in companies of all sizes in all healthcare subsectors, including but not limited to biotechnologies, pharmaceuticals, healthcare equipment, healthcare supplies, life science tools and services, healthcare distributors, managed healthcare, healthcare technology, and healthcare facilities. The fund also emphasizes innovation, investing both in public and pre-public venture companies. The fund considers its pre-public and other restricted investments to be a differentiating characteristic. Among the various healthcare subsectors, THW has considered the biotech subsector, including both pre-public and public companies, to be a key contributor to the healthcare sector. The fund holds biotech assets, including both public and pre-public, often representing 10 to 25% of its net assets. A little bit more background on the company. Tekla World Healthcare Fund is formed in Massachusetts as a business trust formed in March 5th of 2015, registered in the Investment Act of 1940 as a non-diversified closed-end management. So what do you think about Tekla Healthcare Fund? Is this something you want to put your money into, your investment for 2020? I encourage you to do your own research and check it out for yourself and find out more about it and decide if this is what you want to put your money into for 2020, because hey, I'm going to get dividends for the next 12 months in this fund. I'm pretty sure, because you've heard all the great companies that are involved with this fund itself. And you've heard all the great companies that are involved with this stock itself. And it's a global company. It's hitting all the major players in the United States, as well as, these foreign countries. And it's an international player, so it's going to do very well. And like I said, this is not financial advice, but just as my input and what I pretty much think and what I have a good feeling for. I think it's going to do very well this year and continue to be a monthly player. And I'm probably going to put some more money into it this year and, boost my monthly dividends, because it doesn't really pay a whole lot. I don't own many shares of this, but it has been doing very well, paying me monthly on like clockwork, doing very well. So if you haven't already, check out these other videos here, find out more about these other investments, more about these other videos you might want to check out. But, overall, have a great day. Enjoy your week, enjoy your weekend. I'll take care. I'll see you again soon.